Okay, so we spoke about accelerated repayments and we spoke about making additional repayments to your home loan. Okay, this next one looks at, on similar lines to making additional repayments, but looks at roundups, round downs, and saving your spare change. So again, this is just about making additional repayments to your home loan. So, what are roundups? Some banks and lenders now offer the opportunity to invest basically the difference in your spending, which would previously be loose change, uh, but now everyone uses card. Okay, so say your purchase is, and you can set this up to, I think a lot of them do to the extra dollar or to the closest $5. So say you buy your cup of coffee for $4.50. They'll actually, if you're going to the nearest dollar, then they may round up and move the other 50 cents to bring it up to $5 into a separate savings account or into directly into your home loan. Okay, so every time that you're purchasing, there may be a couple of cents different. Um, or yeah, it might be you buy something, yeah, might be buy something for $9.98. They'll round up the 2 cents and send that to your home loan or send it to another savings account, which you can then put into your home loan. Okay, so it's just like investing your spare change. If you are using cash, obviously you could use your spare change, save up your coins and put that into, go and deposit that into your bank and pay that off your home loan. That's money you probably don't really miss. And yeah, you can do that with a roundup on the accounts. Not everyone does it, not all lenders do it. Not every lender that offers it will allow you to put it directly into your home loan. A lot of them might direct it into a savings account, but you could then physically transfer those. So we're just trying to think about ways that we can get to actually making that extra $200 a week repayment, getting that loan off a lot quicker. Um, like the previous examples we looked at with a $600,000 loan over a 30-year term, at current rates of 6%, weekly repayment would be $830. Okay, so if we were able to make, maybe we make an extra $10 per week off those, we could potentially save a year and pay the home loan off in 29 years, and we'd save about $26,000 over that term. So we're just thinking of ways to actually pay extra off the mortgage, um, where we where it maybe seems like we're not pulling as much money out of our own pocket. Okay. The best way is always to just set up that scheduled repayment, an extra $200 a week minimum, that just goes automatically, and ideally before you've kind of before you've like as soon as you get your paycheck, 200 goes out, pays the extra off, and then you spend what's left over. Okay, we're not trying to spend everything and then wait and see if there's something left over because there never will be. So the best way is to set up those extra repayments, but yeah, you can use roundups, things like that, and invest your spare change. Maybe it's even that you um, collect bottles or stuff like that, or maybe you get some, maybe you drink, um, maybe your lifestyle habits that you end up with a few spare cans, things like that. Then you can go put those money instead of just throw them in the recycle bin. Use the money, go and put it into, go and deposit it back. Get your 10 cents per bottle or per can, and then use that money to actually pay off your mortgage. Okay, so those little bits will help. Those extra amounts will help you. Might not be much. You might not be getting much off these little strategies, but they can all obviously help to get that bigger term goal. Maybe it's only $20 a month that you get off with the cans and things like that. It's still going to save you 12 grand and 6 months in repayments. Okay. We can easily see that doing that, plus maybe some roundups, plus making some extra repayments, uh, plus maybe investing if you do some overtime or if you get a bit of a bonus, or if you get a tax refund, you get a bit of extra surplus money that you weren't expecting or from something else that you can actually put into the home loan. That's going to help you get that home loan off quicker, which is really going to be successful if you get, as I said, we want to get that loan down and get that paid off. So you've got, when you enter that sprint to retirement, the last 10 years before retirement, you don't have a home loan. You've then got extra surplus cash flow you can use to invest. You can start bringing forward some of those retirement objectives or those bucket list items that you can get. Now, another strategy that I use regularly is what I call a round down. Okay, so whenever you're charged interest on your home loan, it'll never be exact dollar figures. Okay, so you might get your interest might be $1,908.55. Okay, so what a round down does is that each month after your interest has been billed, you're having a look at your loan account, and you basically pay the extra to round it down to a whole number. Okay, so if we have a look at, let's say we're at year 5 here, okay, and we owe year 5, okay, and we can see here that we owe, go in the dark blue, um, sorry, year 5 here. So at the end of year 5, so at the end of that month, year 5, we owe $558,326. Okay. So round down is basically, so you'd pay the extra $26 and you'd round it down to the closest $100 or the closest 50. So you'd owe 558,300. Okay. So what you're doing is you're just cleaning it up at the end of each month, making an extra little repayment just to get down to bring it to a whole number. It could be 50s, could be 100, closest 100, could be closest 1,000 if you've got the extra funds there. Okay, so they're just little things to get us to do what? To make extra repayments on that home loan. The only way that you are going to get that home loan down is by making extra repayments. If you've got money sitting in offset, yes, that'll help, but essentially that's extra repayments. As long as your interest rate is good and competitive, which you should be working with a good mortgage broker that regularly reviews your home loan for you, so you don't have to do the work. They keep it the rate competitive for you. You don't have to refinance each year. The mortgage broker works to keep your rate competitive each year. They should also be contacting you each year and making sure you're actually paying extra off your home loan, making sure you're actually getting rid of that debt, keep holding you accountable. But apart from having a competitive interest rate, and if your interest rate is not competitive, then you need to refinance or you need to get that down and work with a broker that will keep that rate competitive for you. As long as your rate's competitive, the only way that you're going to get that home paid off quicker is by making extra repayments. So do these things. Set up the extra weekly repayments. Just set it up as a regular credit into that home loan. You're paying it off quicker. Make your extra repayments. Any bit of extra funds that you get in, pay the house off quicker. Pay it into there and don't pull it back out. Get a tax return, do an extra day work or get an allowance or get a pay rise, increase that home loan repayment amount. Okay. You can use the roundups as well on the accounts, investor spare change, things like that. And you can also use round down. So every month after your interest is charged, you may go and round down that repayment amount. So that you're bringing it back down to an even number, which will just be a little bit of extra payments each year. If you're making, let's say it like you're doing 20, what was that example I used there before? $26. So if you do an extra $26 each month to clean it up over the year, you've saved yourself $16,000 in 6 months over that loan. So make the extra repayments. I can't be any clearer than that. Make the extra repayments. If you can't make it right now, start off with an amount and start increasing it. Get a pay rise, get some extra work, maybe take up a side hustle, do things like that. Extra money that you get in, make some extra repayments to your home loan.